Good afternoon, YouTube. Sorry, a little late. Yeah, well done to those of you who managed to join us on the Zoom we did through the CPIs an hour or so ago. Yeah, wasn't too much to report. We've had some volatility, that's for sure, since then, but not one of those slam dunk market moving. It's going straight up, going straight down moves, sadly. In line with expectation, both on the headline, expected at 0.2, we got 0.2, and more importantly, on the core CPI, I know we talk about this a lot, core versus headline, core being the one the Fed care more about, therefore so do we. That came in bang in line at 0.2% as well. I was hopeful we might have got a 0.3 out of this. Yeah, I wasn't expecting a 0.1. If we look back over the history now, that's 2 months at 0.2. I mean, last time we had a 0.1 reading or anything around that level was before all of these rate hikes, right? We didn't start raising rates until March of 2022. So September 2021 was the last time we had a 0.1 reading. So I wasn't very much expecting that to happen. But sadly, we got the boring number out, 0.2. That was slightly lower on the headline CPIs, and sorry, the headline year-on-year CPIs and the core year-on-year CPIs versus expectation, but more of a base effect. The month-on-month ones really no different whatsoever. Maybe slightly more interesting was the unemployment claims. A little bit worse. They have been better on the whole of late. I mean, we had a good run. Yeah, what's this? 6 weeks or so with no surprisingly bad numbers, but today we did have that slightly higher figure. Not seen a figure higher than this since back in June. So yeah, we're starting to see that the jobs market maybe creak a little bit. That'll be interesting to hear when we get the figures out from the non-farm payrolls on the what's actually due on the 1st of the month, right? Normally it's the first Friday of the month, unless the Friday's the first, but just thought today they're dropping that bomb on us on the 1st of September, which is yeah, we go straight back into it after August at least. So hopefully yeah, we'll back with a little bit more gusto then. Yeah, hopefully there's not too much desire to be hitting the markets hard today. We keep banging this drum. I'm not sure why we're here on these things, to be honest, to tell you not to trade. It's probably not in our interest to do it, but here you go. This is the truth. This time of the year is typically the hardest time to trade. The smartest thing to do is go away. So yeah, a few of us will be away week after next, and that's final couple of weeks of this month when the earnings are finally over. Yeah, it'll be a nice time to get away from these markets without too much going on. Prepare yourself for September. So I guess my advice is maybe trade a little bit lower on the volumes, a little bit lower on the frequencies, try to get, yeah, be sensible with trades that you're taking. Don't go chasing stuff unless there's like a real big news event, and often when the volumes are lower, as we've seen actually a couple of times or certainly last week when we had the downgrade of the US debt. That was a good opportunity, but these things tend to be few and far between during August. So just bear that in mind. You have been warned. Let's look at price action from the CPIs today. We can maybe get a gauge on what the hell's been going on in terms of, let's look at the S&Ps, for example. So the CPI figure was kindly out bang on 130, ran up and grabbed liquidity at the point of control for the month, dumped down to the value area low for the month, but now we're trading exactly what, 11 to 08, 3 ticks higher than where we were at the time of this data being released. So no real follow through in either direction. This is chop city, the sort of thing that can be very, very painful to inexperienced traders who want to try and trade it. Fading extremes on inline numbers is no dumb thing, I have to say. You can make money fading data moves if the moves are based on this browser, which this one certainly appeared to be, getting into that high volume area for the past 10 days before pushing back. But yeah, this just kind of illustrate that we're basically back to where we started before this news came out. Given the news is in line on CPIs, it's not much of a surprise. We did have some slightly more interesting moves in other asset classes. If I can bring up, where's my gold hiding? Yeah, well, gold's actually done similar. He's kind of turned around now. Again, moving up into high liquidity up here. Yeah, we round up into this high liquidity area and rejected straight back from there, and now we're back down lower than what we thought. So, pretty, yeah, surprising given that we've got numbers which should be weak for the dollar. You would have thought with the unemployment number being so high, but actually gold is lower than where we were. Yeah. Another illustration that markets aren't always easy. So what have we got on the wires for you this afternoon? Well, in terms of data, we've had the big news of the week, sadly, and it wasn't too big a one. Fed's Daly, she is on the wires at 4 p.m. today. That's kind of more in our time zone over here. 9:15, we have Harker speaking. A little bit late for me. I think Bostic's on the wires from 8 p.m. British summertime as well. Given it very much is British summertime today, we've actually got some decent weather for once. Maybe have an eye on this at open and back out. Yeah, got to sort out. I'm not sure these markets are going to give me too much. Having said that, the Thursdays are typically the busiest day of the week, so there is still hope that you might get some decent action. But the action we've been having in recent days has been very much, as we've been calling it in the office, the grand old Duke of York markets, where if we have a look at the S&P from yesterday, we've had a big sell-off and then a big appetite to buy it back, and another big sell into the close. Yeah, pretty interesting action, not dissimilar to the previous day, where at the open, where we're trading here around the market open, big, well, I say big selling. It's not sniffed out this sort of move, 20, 30 ticks on the S&P, and then by 4 o'clock, 10 that around, and then actually ended at slightly higher than where we'd opened on the day. So we are getting these big turnarounds in markets at the moment. Just shows that there's no real follow through, no real commitment. Things get overdone on the upside, as you can see what happened with the DAX this morning. Bit overdone on the upside, and then it comes all the way back down to where we came from. So yeah, just be aware that this is very typical at this time of year. So yeah, maybe taking your profits when they are on the table is no bad thing in the summer. If you can come out of August having made a little bit of money, I think you're just finding a good trader. So don't trade exactly as you've been trading through the remainder of the year. Your September, October periods, or your January through to April sort of time. You're going to be good to learn how to trade in these different regimes, and this is one where you really need to be banking when you get into good gains. Okay, so we've got 30 seconds or so to the open. I'll hang around with you till then, and we'll see what these markets have to deliver, because the opens have been where a lot of the fun has happened. All markets, we saw it just on the DAX there this morning. Decent action into the open. We've had a few times where we've had some good signs that the market was going to weaken. We saw it yesterday. The S&P was very weak in the 5 minutes prior to the open. Today, we're not seeing quite that move on the Nasdaq or the S&Ps, to be fair. So yeah, a bit more muted into the open. Yeah, let's see what the market's got. Just while we're watching this, if you do want to join us for the live Zooms that we do through rate decisions, through CPI and big data releases, non-farm payrolls, etc., kind of talking through our thoughts on it, what we're trading, why, targets, etc., then you can have a look at the description below this video. It shows you how to sign up for part of our discussion group, and you get links to all the videos we do. It's not just on data releases. We do these sort of videos each day, twice in the morning, just before and during the open in Europe, and then again in the afternoon. So Dow higher, S&P slightly, Nasdaq slightly weaker. A bit of divergence between the two. This won't last all day. Normally they start to get towed along in line in the end. It's interesting that the Nasdaq used to lead the way on this, but hasn't quite had that same pull in the same direction, or drag the Dow in its direction as much as it used to. The Dow has managed to turn the Nasdaq around for now, at least. Going to shift down in the value area for the week actually as well on the S&P, on the Nasdaq. So this might have a little look up here. Maybe a lot to ask on a day like this. Let's see what S&P starting to garner a little bit of strength along with it. Dow eyeing those highs. Another thing to watch out for in these markets is stop runs, swings of highs and lows. They can often be taken through levels and then swiftly given back. So yeah, do bear that in mind if you are trading. these markets, you may well see new highs taken. We just had one, taking out the high of the data on the Dow. So if this was to give that up, we might look for entries. So far, the appetite still looks remarkably strong for this market so far. So yeah, trade smart. We're going to be back with you in the morning, but for those of you who aren't, we might be back for us at 7 a.m. on the GDP in the UK. There's a raft of other data out at the same time. This is probably the easiest one to trade, I would say. Tomorrow, PPIs don't mean a great deal when you've had CPI the previous day. On those occasions, you get PPI ahead of the PPI, ahead of CPI, which happens once or twice a year. Then PPIs maybe matter that little bit more. So tomorrow's ones are on the scrap heap for me. And then preliminary University of Michigan numbers, the consumer sentiment. Cambridge markets probably want quite a big beat on this one, given it's Friday in the summer. Not so yeah, might be an early start and hopefully an early finish again tomorrow if the weather's nice. So yeah, enjoy your afternoon, and we'll look forward to